Sure. I think we have a trade truce, not a tariff deal, which I think is important, and we kind of walk back from the ledge. But what it means for private markets is that you've defined a range of outcomes. So we operate in a longer time frame, we have longer dated capital, and what's happening in the market is that nobody could tell what the bottom was or what the worst possible case. So I don't think the worst is over, but I think we've discovered what the worst can look like. And that gives you really a range for pricing and a range for more activity. No longer the case of wait on the sidelines, but now you know the framework.
And what is your expectation for activity in the coming months? I mean, clearly, given the volatility in public markets, one of the key exit routes for private equity has been closed, i.e. the IPO market. We've in turn seen a major uptick in secondaries. What is the pipeline looking like for you in terms of exits?
I think you hit it on the head in the sense that there's a range of activities, it's a range of sectors, and it differs, right? So the buyout piece, the equity financing piece, has been waiting a little bit on the sidelines. And there's been less activity than we would have forecasted because of the volatility and the macro, which I think is being addressed with the changes that we heard yesterday. So we expect more activity on the equity side. Credit has been very active, as you led into the piece, and we'll continue to do that. And secondaries has been exactly even just red hot. We can go back to that.
Red hot. Okay, that's interesting. The secondaries have been red hot. What are you seeing in terms of pricing, though, in secondaries?
Secondaries are red hot because it's really the best instrument that private markets has to participate in a high volatility environment, potential distressed sellers, high volume of selling versus buying interest. All of that is really going to play to buyers. It's a buyer's market. This is not a new market. This has been growing steadily, still relatively small. It's under 2-3% of the whole primaries market. And it's been the right tool, tried and tested in scale and size. And that's why you've been seeing them more active and capturing the pricing opportunity.
Well, in terms of the pricing of assets, you said it is a buyer's market,
Yep.
and yet you also mentioned in the sentence before that it is a highly volatile market. I wonder how quick the pricing of assets in the private sector is to respond to that volatility, given the fact that it's not a stock market. We don't have
Correct.
to see immediate move by move.
Right.
So is the pricing and the realisation from the sellers a slower process, a more difficult process for them to adapt to the new environment? Or actually, is it better that they hold off through these periods of volatility and wait for things to calm down?
A lot to unpack on the question, if
Yes,
I may.
of course.
So I'd say the first part is the market price is off of a combination of the latest NAV that is known,
Yeah.
plus all the information that you're supposed to have and the advantage that we at Hamilton Lane as private market practitioners do have. So it's not a public market, it's not a transparent market. But you are obviously reacting to the market daily. And in fact, you have a closing period of time where you can have cash flows and activity. And so it's a good market from the point of view of having a willing seller, a willing buyer, and striking a good price that is current. So that's on the technology piece of that. In terms of the cycle and the volatility, it's a market where the pricing can track the cycle. You can see deals now struck at 92 cents on the dollar. Deals can come back up to par. So we can show you the data that shows you the evolution of that. Should we hold? Should we sell? Part of the other question.
Well, I've never seen an NAV yet on either listed or unlisted that it was below the market valuation. The NAVs always seem to be like, for instance, in the REITs or in the property sector as well.
Yeah.
They're very, very slow to come down to the reality of the current market, aren't they?
Not as much. I mean, this entire private markets industry is closer to fair value than we get credit for, frankly. And Hamilton Lane has been, we think, pioneer and bringing more data, more transparency, and welcoming that question, that line of questioning, and that approach. But again, remember that the transaction itself has to strike a price. And we're dealing with a very sophisticated institutional level of sellers and buyers. So no one is in distress from a point of view of absolute fire sale situation. And therefore, these are bargains that are struck at current prices. And there's plenty of data on this space.